And good morning, everyone. Welcome back to NeelyFX. My name is Michael Neely, and this is the channel where I talk about foreign exchange trading, prop firm trading, and also just watching the markets, technical analysis, and all those fun things. It's Saturday, March the 21st, and the markets are closed, so we've got a little bit more time to kind of go through the charts and see what's happening, see what could be happening next week, and what happened to close out the week. We've got some things, some startling new things that took place that you might want to check out. Also, if you like this video, then by all means hit the thumbs up. And also, if you want to subscribe to the channel, or if you want to see more of these videos, then hit the subscribe button, and you'll be notified by YouTube when when I put out more videos like this, and also the shorts. Put out shorts too. And lastly, if you want to talk with me directly, then by all means hit me up in the comment section, and I'll get back with you as soon as I realize that you texted me something. But in the meantime, I think. Let's go ahead and get into what we're talking about. We're talking about putting money at risk, so we need to talk about disclosing those risks. And I live in the United States, so I'm obligated to say this. This channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker, trading my own capital. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trade with funds you can comfortably afford to lose. And here's the CFTC risk disclosure. Forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before trading Forex, consider your investment objectives, experience, and risk appetite. You could sustain a loss of some or all of your investment capital. So with that, let's go ahead and get into what we're looking at today. Lighting's a little bit weird. At any rate, this is Trading Forex for Profit.com. This is my new application I'm working on. This is a Forex trading education platform that I'm building that allows people to kind of monitor their accounts, live accounts, demo accounts, as well as prop firm and prop funded accounts. So, and it's designed to help you get through prop firm challenges and actually start making money trading prop firms. So, we're trading with prop firms. So that's we're going to be getting into a lot of other things later on today. It is very comfortably priced right there. Although I'm not taking any clients yet. We're still building out the back end, and I've got a few neat little features I want to put in there before we unleash it on the world. So with that, let's go ahead and get into here. That's refreshing. Look at the DXY. Bounced right off that 25% median and that pitchfork and went straight up to the 50% one before pulling back. Again, that's what we're looking at here. Something else I want to point out. Look at these bond yields. Bond yields went through the roof yesterday. Euro bond yield went up the Euro 2 went up the yield, not the price, the yield went up 5.75. The way bonds are done, if the bond yield is going up, the price is going down because nobody's buying it. So money is flowing out of government bonds yesterday, which is kind of interesting. The 10 years is what we were watching Forex, and look at that. The Euro 10 is up 3.64%. The US, that's the Canadian 10, sorry. The US 10 is up 2.9%. The Canadian 10 is up 3.4%. And that's indicates, again, stronger yields in theory mean a stronger currency. Because you've got it's more of an incentive to buy the bonds and buy into that currency because the yield's better. So that's the incentive, that's the relationship between bonds and currency. Sometimes it holds, sometimes it doesn't. It's not an exact science, as economics is not. But that's what we've got going on. But the DXY came down to here and then pulled back, or went up, pulled back from its downside, there, that way, to 99.5, which has been a spot of contention for it for quite some time. You see that was the top here, the top here, the top here. So now we're looking at it being possible support at 99.5, and then probably going up from there, or possibly going up from there. There's no probability that it's going to go up, but there's a good chance. It's actually not a good chance it's going to go up if you just look at the straight technical analysis, because it's not even coming up to 50% of this down bar, of this very strong downward push. So it's we're looking at a possible breakdown in this short little dollar rally. We'll see how that goes. It's been going on since about February, January, late January. So could see this 3-month start falling apart. It did top out here at the same place that it has topped out here before, and right at the May 2025 weekly high close. So it's looking like the dollar trend could be breaking down a little bit, could just be pulling back some more. And depending on what time frame you're looking at, you're going to get different results. So that's why we trade multiple time frames. Euro big pullback, big push from the euro against the pound. So the euro quickly became the dominating between the two, between the euro and the Great British Pound. I don't trade this specifically, but I do. That's be a weird mean reversion entry. So you get the mean reversion signal here, and then you finally get the 1, 2, 3, 4, 5, 6 days later, you get the push. You get the bullish push. That's kind of bizarre. Oh well. And other things I've never seen in Forex before. Let me show you what I'm talking about. This is a clearer mean reversion strategy right here. You got the doji right outside the got a strong down push down below the 20 the 2 deviation 20 Bollinger Band, 20 period Bollinger Band. Doji the next day. Then after that you get the push up that sustains straight through the median and straight into the straight across the 1 deviation, and then you'd want to sell about right there. That's the mean reversion strategy, because once it gets to an extreme, it'll always revert back to the mean, which is the 20-day moving average right here. So here we have the same thing going on, no doji, but a good strong turnaround candle, and then 6 days later you finally get the entry. I don't know. Oh well, it's Forex is definitely not an exact science. Tread carefully. Here we are. We have the euro versus the dollar right here, and it just pulled back a little bit, especially on that pretty much the exact opposite of what the DXY is going to do is what the euro versus the dollar is going to do, all things considered, all things equal, because the euro USD is 57% of the DXY. So that's the reason for that. And it's the majority of it. I think the next highest one is 17% or something like that. I'd have to look it up again. Let's see. Dollar versus the yen. Big push down. They pull up. What's going to happen next? I don't know, but it closed right at 159.22 for the weekly close, which is right at resistance, typically. Did push through to 159.74. We still haven't seen a 160. 160 typically begins an intervention phase with the Japanese. They don't like the USD JPY to be over 160, but sometimes it does. Then they do a little risk intervention, and then we take the downside. But we only do it during the day, because if you again selling the Japanese the yen process is going to be a little bit tricky, because you're going to lose money on the very beginning, because if you hold it overnight, if you hold a long position overnight, because at 5 o'clock New York, all the currencies settle their accounts, and interest is paid or charged. And with the yen crosses, you are charged interest. Here we are, pound versus the dollar again. 50% pullback on the previous day's bullish trend. 50% pullback, which is usually a good time for a turnaround. And also, it's got right back inside that little channel we made a couple days ago. So it's interesting to see how these channels hold and continue to hold. If they do, then if the channel starts breaking down, then it's time to consider a breakout trade. Pound versus the yen. Here we are again. 212.43. That's been a thorn in the side. The 212 area has been a thorn in the side for the pound versus the yen for quite some time now, going all the way back to early January. And here's where it could not break 212 for the longest time. But it's not the highest we've ever seen. We've got the March, well, probably delete that. That one's not valid anymore. And this other DeMark thing right here, if I can find it. I think that's it. I'll get rid of that one too. Because that experiment did not work. But it's staying within this channel too. Going to see if it stays within this trend line right here. So far it is. It's very interesting how it tracks these channels and trend lines. This one has not been tested in quite some time. It probably won't be for a while. If it does, it'll be hitting about 215. Might be interesting. Let's go down to the monthlies real quick and see when the See if we ever had anything this high before. Oh yeah, we did. Look at that. Back in October of 07. Last time that the pound versus the yen spiked this high was in 07. What happened in 07? People don't like to talk about 07 and what happened in 07, so we won't. Go back down to the, don't want to draw that line on there? Yeah, why not? Draw that one right about here. With a, it's an 08 high. Monthly high close. I'd like to see the weeklies. Well, it's going to take me a long time to get back there. Maybe not. There we are. So that's going to be the weekly high close right there for 2008. This is, I'm going to put this in here for a horizontal ray right there. That about right there. 212,496. We'll call this the 2008 weekly high close. And then again, we want to come back over here to the 2007 weekly high close, October. No, it's right here, July 2007. That's when things started breaking. 2007 weekly high close. So we're starting to get correlations into the 2007, 2008 weekly high closes, which were not necessarily good times economically for anybody. That's when we had the great financial crisis. Some call it the, everybody was supposed to be hoboing on trains and stuff like that. That's what I'd heard. And I was in a field that was highly probabilistic to be hoboing on trains, and I did not. Instead, I thrived during that period. So I did not have any real estate exposure. So we're looking at possible real, I'm not going to try to predict the future, but we got a lot of red flags going on in the, economically right now. This is the 200-day moving average, I think. Check and make sure. Yeah, it is. Okay. 200 a day and the 50-day moving average, they're not going anywhere anytime soon. They're going to trend sideways for a little bit. That is a train, by the way, if you hear it in the background. Yes, I live on the right side of the tracks. Here we go. We have the, oh, look at that little fun little trend line right there. The euro versus the yen. A lot less volatility than the pound versus the yen. That's why people like trading the pound versus the yen more so than the euro versus the yen. However, it's the euro has cooled off, so that makes the euro versus the yen a lot less appealing than the pound versus the yen. What have we got here? The Canadian dollar versus the Canadian. Not a whole lot going on here. I do not like this pair because I lose money on it almost every time. I can't figure out this trade. It's just if I'm going to watch it, if I'm going to trade the dollar versus the CAD, I'm going to sit there and watch it with going to be in the office and trading all the time. Pound versus the yen. Pardon me, Canadian versus the yen should be changing due to the price of oil, but the correlation is breaking down a little bit thanks to what's going on the Japanese side of this trade. The Canadian versus the yen is 116. It's still strong. It's a very strong pullback against that downward candle right there. A very strong upward candle. It's well over 50%. So we could be seeing that continuing, and that's going to be a correlated to the oil trade. Speaking of oil, let's see what's going on here. Oil closed at $98 a barrel. That is should be giving economic red flags because when the price of gasoline and oil goes up, the price of shipping goes up, and the price of everything goes up. So you can talk all you want about how if we only had electric trucks, because ultimately all electricity comes from fossil fuels right now. Not all of it, but majority of it sustainably. I live in a state that is mostly green. I don't think we have any coal-fired plants, any coal plants, or any. No, we don't have nuclear plants. So it's all solar and wind powered, and it's great for smaller populations, but it's not going to power a city like Los Angeles. Okay, here we go. Aussie versus the dollar. Wow, this is bouncy, bouncy, fun, 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 fun. Look at that. That is just a beautiful. I'm starting to really enjoy looking at this. This gives all sorts of opportunities to just go sideways on it. If you get into a mean reversion strategy, probably around the 1 hour, that would be the way to trade this. Let's see how that. Let's see what that chart looks like, just for grins. Okay, we're excellent mean reversion right there. Entry, excellent mean reversion entry right there. Again, it's going to pull up well past the mean, so you're going to get a few pips on that before you sell out, before you close the trade. Sell out, like that term. Here's one here, another entry right here. Goes all the way to the other side of the mean reversion up here. You can catch the mean reversion here and catch it on, well, takes it a while for that to, it's like the other one we saw earlier. It's we have the mean reversion entry that it takes 2 weeks for it to get the downside. That'd be a tough trade to handle. But again, you're going to make a little bit on it, but not enough to buy your Lambo. Here we have the right here, right at the 70. So I want to watch. This is actually a pretty good little trade to get into if you're going to trade mean reversion and if you're going to do it on the 1 hour basis. So I'm going to test my EA on that shortly and see how that works out. Better yet, well, yeah. Let me get set up for that. Give me just a second. Alright, so we are testing this. I have it set up in green, so it's not showing up well because the green screen behind me. So we're going to have to figure this out. But I'm running the strategy tester on my expert advisor, my Bollinger Band, and mean revert and RSI mean reversion for the hourly on the the Aussie versus the dollar. See how that works out, and I'll show you the report. I have to show that. Will the graph show up? Yeah, the graph shows up. Yeah, so not so much in 2025, but we'll see if our results perk up again in 2026. These are not real trades; it's just the strategy tester part. Figure out the balance versus equity thing. Oh well. Little middle side note of what's going on. Let's get back to what we're talking about. We're not going to watch that all day, and then we'll see if that report is done by the time we get finished. All right, gold. Look at gold go down. Gold closing below 4,500. So we're starting to see a breakdown in the metals. Big breakdown in the metals. Platinum is not breaking down, which is interesting. It's up 1.3% when everything else is down bigly. I'm going to go ahead and put in a weekly close on this because here we have the. That's pretty safe to say. That's probably. Well, it may not be. I'm going to hold off on that, come to think of it. That is not going to be a weekly low close. Wait and see what happens Sunday and Monday because we still have some time left in March. We're almost into April. That'll be interesting. But that's a huge breakdown in the gold trade. Noticed a trader yesterday, I remember his name, I'm going to say it, but he was talking about how he lost 95% of his account because he couldn't get out of a gold trade yesterday. That's how it works. Sometimes you get the casino mentality. You just think, oh, it's going to go up, it's going to go up, it's going to go up. And it doesn't. When the bottom falls out, the bottom falls out hard. Platinum up. It says it's up 1.3%, but that's a red candle. Don't know why that is. Oh, some on weeklies. That's a doji. How about that? So that's a red doji, and it's saying it's up 1.38%. So I don't know why that's happening. Never seen that before. The numbers say up, the candle says down. Oh well, moving right along. Palladium down 0.69%. Here's the big one. Silver off almost 7% yesterday, down to 67.87. We'll see if that continues into the every indication in the macro level says that there's going to be a silver squeeze because of the correlation between production or between the number of contracts, futures contracts, chasing the limited supply of silver. So we've got about 1 million ounces of silver available for delivery and about 4 million ounces of silver that if those contracts started demanding all the silver and quit rolling over, then you would see a huge spike in the price of silver. However, that's not happening. The exact opposite is happening. We're watching the silver pricing melt down. silver pricing coming down. I shouldn't say melting down when it comes to silver. Next stop below this is on the daily chart is going to be 54. So we'll see if this continues beyond this point. That's your breaking point right there. Let's go ahead and put that in as a weekly low close. Weekly, I'm finding our weekly closes are more beneficial to track, and that's also based on my friends at Forex.com, like Michael Boutros and James Stanley. They are big proponents of the January weekly low close. So that's going to be the January, I think 2026, just in case silver rebounds, and we are dealing with gold, silver and gold this high for a while. So 64.08 is the breakdown point, and we're $3.50 above it. So we're almost $4 above it. So we see a breakdown below 64. The next stop below that is going to be 53. So that would be fun because I'm still have a lot of silver. I'm not selling any of it because I do expect it to it's still, I mean, I bought it at between 16 and 32, so I'm still doing very well on the silver physical side. But other than that, let's look at the softwares real quick, just because I have an interest in software stocks. IGV is down almost 2%. HubSpot down 1.3%. Salesforce up 0.2%. And I'm still waiting for the sales. I think everyone's been calling out a Salesforce HubSpot merger for probably 5 years now, because HubSpot has they're both in the same business, but I think Salesforce is the better platform, more complicated but better. Intuit right there, more robust, we'll call it. However, I do say are CRMs even necessary anymore with the level of digital marketing that goes on these days? Let's see. I mean, when salespeople call me, I just don't answer. I haven't answered the phone in probably a year now. Intuit, unless I know it's my mom. Intuit is down, and I'm a customer of Intuit, so that one is down, or is up a little bit, up 32 cents. Adobe, I'm also an Adobe customer. That is up a couple dollars. NVIDIA, I'm not a customer of NVIDIA that I'm aware of. And Upwork down 0.07. So we'll see if Upwork can get over its $11 blues. If not, next up it's going to be somewhere around $9. Below that it's 7-ish. And I just don't have good prospects for Upwork on the U.S. level. But at any rate, that's all I got for today. We'll put it on a happier chart like the DXY. So we'll come back and do some stuff with that a little bit later. Let's see if we've got a stop point on this yet. Nope. Okay, so my mean reversion thing is not working at all, as you can see that chart. So I'm going to have to work on that strategy and maybe change it a little bit to see what I've done wrong, because right now this mean reversion strategy is not working at all. As a matter of fact, the results right now are down. It says I started with a $400 account. Now about $100 on a $400 account, so don't do that. That's a sell. That's a sell. It just went badly, as indicated by the graph. We don't have the report yet. Where are we? January 28. That's on an hourly, so that's going to continue a little bit longer. I'll maybe share the report tomorrow, maybe, and see what's going on with that. But in the meantime, or I'll make a short of it and share with that too. I might do that too. So with that is all I've got today. That's our Saturday weekly review of the foreign exchange markets and some of the futures markets that we trade in the prop firm land. I am still alive and well on that prop firm challenge, barely, but I'm still in there. Right now I'm taking more time to build my platform, my trading platform, than I am on actual trading, so we'll see what happens with that. There are a couple of trades that are perking up. They're starting around, what's the date on that? February 2026. So February 2026, it's all of a sudden, we're making money on that strategy. Well, a little bit. And then we almost lose it all. Lose what we made. That's called Forex land. Okay, so there we have it. It did finish. And the report goes like this. It is lost $101 on a $480 account. So that's a 25% loss on that. So that strategy did not work out like I said it would on the the Aussie versus the dollar. So don't do that. But at any rate, I'll have a refined strategy a little bit later. It does work really well on the 4-hour on the euro versus the dollar, and I'll show that one a little bit later maybe. But in the meantime, that's all I got for today. You guys have a great one. I'll talk to you later. We may get out and about and do some shorts out in and touch some grass, as it were. Not just touch it. Actually walk around on it. But at any rate, that's all I got for today. If you like this video, then hit the thumbs up button. If you want to see more of these videos, then subscribe to the channel. And lastly, if you want to talk to me directly, then by all means, hit me up in the comment section, and I'll get back with you as soon as I realize as soon as I realize I've got some comments. So you guys have a great one. Talk to you later. Bye.